Well, no one can deny it. 2024 was a doozy as it relates to pre-sale and new construction, but it was really nothing when you consider the entire scheme of pre-sale properties coming up for completion in 2025 and 2026. Now, unless you were hiding under a rock, real estate in Toronto, specifically pre-sales and pre-sale condos, were the talk of town for basically the entire second half of 2024, and they'll continue to be into 2025. But here's the thing, there are other places in the country that are going to see some serious repercussions of all of those pre-sales coming up in 2025. And the question mark is, are those repercussions, or are those situations that are just going to play themselves out and smooth out as the real estate market continues to pick up? Depending on which side of the border that you sit on, there are going to be a lot of considerations whether you buy a pre-sale today or if you have a pre-sale coming up for completion. So if you are one of those people, should I buy one or I have one coming up, you're going to want to pay attention to this video because we're going to cover a number of key facts. Case in point, we're going to talk about the decline of pre-sale sales and how that could impact the marketplace. We will talk about the inventory levels and pricing trends that we're seeing in the marketplace right now. In addition to all that, we're going to talk about understanding the market shifts and dynamics and why this specifically is happening right now. And does this mean bad things for pre-sales for the next couple of years, or is just a serious issue that we're seeing in this current marketplace right now? How to overcome financing risks like low appraisals. That has been a serious conversation, and of course, long-term projections for the marketplace. So without further ado, let's get into it right now. Okay, so as we're talking about pre-sales, I think it's important to really start off with the market dynamic as it relates to trends. Now, I've got some notes here with me, so I'm going to be looking up and down as I go through this, but let's start off with some of the biggest things that have impacted the pre-sale market and what that looks like. You'd have to be hiding under a rock to realize that interest rates themselves have played a role as it relates to the dynamic of pre-sale properties. I mean, case in point, if you look back between 2022 to 2023 and 23 and beyond, interest rates rose 4% in a very short period of time. And the pressure that we saw on the marketplace with fixed rates around 6.5% and even higher was significant, notwithstanding the fact that there were a whole bunch of people that were hoping to cash in on the hype of pre-sales during the years 2020 through 2022. And those are the people that are most likely going to be impacted here today. So looking at market trends as it relates to Toronto specifically, pre-construction condos were sold between $1,200 to $1,300 per square foot in 2021. And those properties are seeing resale values closer to $900 to $1,000 per square foot. That's a market difference, and it can mean the difference of literally $100,000 on a 2-bedroom or a 1 and a den condo, which is crazy. As it relates to buyer sentiment around presale condos, a recent survey in 2024, it found that 47% of pre-construction buyers experienced unexpected closing costs, basically meaning they didn't anticipate they had to put this much money down because of the low appraisals. More on that a little bit later. And the market projection from CMHC predicted only a 2 to 3% increase in condos over the course of 2025 and the next few years after that, making obviously speculative investments even more risky and more expensive for those who had pre-sale properties coming up at that time. So the first question is that something that's indicative of the entire country, or is this just a Toronto issue? And the answer is somewhat subjective because it depends on where you bought, when you bought, and specific in what place. Because if you bought in early 2021, let's say January, then even though you most likely paid a premium, it wasn't until about the second half of 2021 that we saw the prices really start to move up. And then the end of 2021 where we started to see multiple bidding and people basically pushing themselves to the front of the line to get those pre-sale properties. Why did we see those properties priced that way? I mean, is a question that so many people have been asking, and it's not really for us to dig into too much detail for this video because it's more about what you do from a financing standpoint. But I think the real answer to that question is, well, two things. Number one, hype. People would pay anything to get into the properties, and obviously there's a level of speculation associated with that. And the second one was the increased cost of construction with delays. Some other notes I found here that construction delays continue to be a major issue with these properties, with 65% of developments in this case, in Ontario, exceeding their original completion dates by an average of 8 months. Full disclosure, I think a lot of people are pretty happy if they purchased a property and of course they saw a delay. Why was pre-construction even a sure thing? And what does that look like? So pre-construction was considered almost a sure thing pre-2022 with low interest rates and the market continuing to go up at 5 to 7, even 10% of a clip. There wasn't enough supply to meet the demand. And with those who are purchasing properties seeing and realizing potential value gains of $50,000 to $150,000 on average for a presale, what was the downside to putting 5% or 10% down on one of these properties, in this case, say $50,000 to $100,000, and essentially holding on and flipping it right before completion? And that was really the game that most people were paying for a period of time. And the benefit to them was, of course, they were really seeing a lot of return. And so it was very low risk. As it relates to the costs of buying a presale property and where people are getting stuck and what's actually going on today, the first thing we need to be conscious of is appraisal values. Now, if you're not aware, a presale property, for the most part, when you purchase one, you buy it at the purchased or agreed upon price. And let's say that's $700,000 today. But banks, if you're obtaining financing for a particular property, they will appraise the value of the property at the time that it's complete, including GST. So if you purchased a property for $500,000 today and GST was 5%, $525,000, the property has to be able to be notably appraised at $525,000. And in the event that it's not, then the buyer has to come up with the difference in down payment. So if it was appraised at $400,000 instead of $500,000 in this hypothetical situation, buyer has to come up with the difference in the down payment. So if they had 20% down on $500,000, that is $100,000. If it was appraised at $400,000, then they could only borrow up to $320,000, which meant they would have to come up with an extra $80,000, so 80% of the difference on that particular property. And that's something that I've already seen happen in a variety of locations, everywhere from Kelowna, BC, to Ontario, to Vancouver, and Fraser Valley, and other areas. If you're in that situation and you're trying to understand the landscape as it relates to presales, does that mean that all presale properties are inherently bad? No. It really doesn't mean that at all. What it means is that presale properties were misjudged and overinflated for a period of time because of heightened demand and, honestly, speculation. And we can call it what it is. People were speculating. I hear a lot of people, and I'm sure I'll get some comments on YouTube here about all of the greedy people trying to buy these properties. And yeah, maybe there is some level of greed. I don't think it's that. I think it's people that were misguided, misrepresented, or thought that the gravy train would continue forever. And the reality is we kind of need these investors to continue fueling the market to a degree, because they're the ones placing deposits that allow builders to build. But with everything that's gone on the last couple of years, I think we will see a huge amount of setbacks as it relates to getting these properties built going forward in the next couple of years. All right, so here's a little bit of a guide if you're trying to figure out if a presale property still could make sense in 2025, and or how to survive if you already have one right now. The first one, already stated, is the market shifts and market dynamic. If you're getting into the presale market or you have a presale, you need to clearly understand the dynamic in that real estate market. Are we at the bottom or the top of the cycle is something that anyone can guess. But I think we could argue at this point right now, we're no longer at the inherent top of this current cycle and most likely on our way back up. That doesn't necessarily mean a presale is still a good buy, but that might help out some presale buyers in the near future. What you need to be looking at is, as it relates to purchasing a pre-construction right now, is you need to be looking at the square footage and the market dynamic in that particular community more than anything else. What is being built now? How far ahead will this be built? And of course, what's about to be complete in that market in that near area? Because that can have a significant impact on what your actual outcome is. The second thing you need to be considering here is, as it relates to your financial consideration, do you have money available from a financing perspective to come up with your worst case scenario? Again, in that survey, people suggested they didn't have enough money for closing costs, like 50% of people. Closing costs, if you're buying a property as an investment in a place like Vancouver, is not surprising. You pay property transfer tax, you pay legal fees, but the surprise for most people is, what do I do if I have to make up the difference in regards to a low appraised value? And so I typically recommend, and this is crazy to say this, but you have at least around 2 to 3% of the purchase price of that property at minimum available for a worst case scenario. Some might recommend 5%, 10%, but I would say that would be your bare minimum to purchasing a presale property right now. In this type of a market scenario, the key is, how do you deal with a low appraisal and what are your options? Now, if you've purchased a presale property and you're going to get it appraised, this is a reason that we advocate to working with a mortgage broker versus a particular banker, because of the fact that a presale construction condo will require an appraisal. We can have the ability to not influence the appraiser, because we don't have any ability to do that, but we can pick and choose to work with lenders who are open-minded to challenging or contesting an appraisal or receiving a second appraisal if the first one doesn't come in at value. In fact, we've done that for many clients because the reality is not every appraiser is built the same, and some of them will look at properties differently than others. And so for the sake of conversation, you really want to consider who's appraising your property, which bank you're working with, and if that bank has flexibility around revised appraisals, because we've seen many situations where people have come to us for a second opinion, and unfortunately, that appraiser was just not experienced that building or that type of property, and they were able to get a revised appraisal that came in at a value that was making more sense. The second consideration is just what is your personal financial situation? I've met far too many people that put a deposit on a pre-sale and they didn't have intentions on closing, which is the serious, like, why would you do that in the first place? But I think they felt pressured, like, yeah, I can make sure I can qualify at that time. Life changed, they lost their job, something happened, and they didn't deal with it. And here they are at completion, about to lose their deposit because they don't have the cash in hand. Now, if you already have a property and you have equity, then there are options that we can utilize the equity in your property to help you. It doesn't necessarily going to mean that you're going to qualify for conventional financing, but it could mean that you can get a financing option in hand for yourself. The reality of looking at a pre-sale property as it relates to closing on one is one of due diligence. And so again, if you don't have representation, you need to get representation, and you can't just get any representation. I mean, a realtor. As much as people on YouTube hate realtors, there are fantastic realtors out there who can do due diligence on things like the lot, the location, the OCP of the area, the neighborhood, the developer, the timelines, the deposit structure, the assignment structure. And if you don't know this already, the assignment structure is the payout if you assign that contract prior to completion. Over and above that, I think there are some key considerations moving into 2025 that someone should consider if they're purchasing a pre-sale property. The first one is, what does the resale market look like, and how does that impact the pre-sale market? Based on some of my most recent stats, the resale market is expected to rise by a minimum of 12% in 2025. And I think that is going to have an immediate impact on pre-sales and new construction properties, not only from a value standpoint, but it's also going to have an impact in just generally speaking, the psychology of real estate moving again. And so I think you'll see people kind of move back to pre-sales if resales become more competitive. And that's going to help some people with those properties close, but it's also going to, I don't want to say force, but push some people into purchasing pre-sale properties again in that marketplace. So what are some of the long-term projections from the pre-sale market? The first one is experts right now are predicting that pre-construction activity could lead to severe supply shortages in 26 and 27, which is going to set the stages for a renewed price surge in the future. I'm not saying don't buy a pre-sale at all in any of this information. What I'm saying is don't buy it for the sole purpose of flipping without an understanding of the marketplace and without the backup money that you could close on said property, especially if you have a goal to assign it. However, with the fact that we haven't seen many people purchasing these pre-sale properties in specific, there is most likely going to be some form of a supply shortage. And based on these predictions, 2026 or 2027 could be the year that we see pre-sales start to come back to the marketplace, which in English basically means that's where we might see a value surge. Again, you need to make sure you're not overpaying for said property, and the property that you're purchasing is one that, again, is suited for a rental, but is something that you should consider. The reality of all of this conversation is there's three things. Number one, if you're buying a pre-sale, make sure you intend on closing on it. Number two, don't buy a pre-sale for speculation. Number three, get the representation to make sure that where you're looking makes a lot of sense. And number four, look at the market statistics. Like, there are statistics to support where it makes sense to buy and where it makes sense not to buy. Don't buy it from a crappy developer, and don't get advice from your friend's mom's brother's uncle's sister just because they said they got the ins on a pre-sale. If you have a pre-sale coming up in 2025 or 2026 and you're concerned on closing on that, send me a message in the link below and we can walk you through our pre-sale completion strategy that has helped some of our clients overcome low appraisal values and help them get them in the door when the banks have said no. If you found this helpful, hit the thumbs up and let me know. Would you buy a pre-sale?